Welcome to the show. I'm joined by Tim Harrison, Head of Wealth Management at Linear Investment. Very good morning to you, Tim.
Good morning, sir.
Right, let's kick off with headlines. Merrill Lynch hit by a 34 million fine for a report failure. It struck me, just seeing that headline, that there's still stuff coming out of the woodwork. MNBA sent me a letter. I basically looked for some compensation on PPI. They rejected it, and they sent a letter saying, actually, we got it wrong. New FCA rules and regulations reapply. We probably owe you some money. How long is this going to take to come out of the woodwork?
I've got to say, going back to the PPI claims, I thought many years ago when the first wave of fines were hit on the likes of Lloyds and Barclays, etc., I thought, okay, that's going to be it. But then, as you're seeing quarterly or their annual results, etc., the provisions they're still putting aside for these sorts of things, it's a never-ending story. Again, how deep does it go? A lot deeper than we first thought. I mean, this, to be fair, with Merrill Lynch, obviously one of the city's biggest employers, let's be frank about things, it is a huge number. But again, it's a failing that shouldn't have happened. It's just their reporting.
Derivative trade reporting.
Yeah, it's the EMIR reporting, which is, it's a new or newish regime, if you like, which is supposed to clear things up and make things a lot more transparent and straightforward. Obviously, their failings have been highlighted, hence a pretty chunky fine.
A chunky fine indeed. Right, let's move on to the next headline I picked up. Rates will have to go up. Whoever heads the Fed was the headline in the Evening Standard last night. A new Fed chair by November the 3rd. So they're talking about Mr. Trump. Got a number of people to join this committee of 12. And the highlight being that interest rates have got to go up, and the chances are whoever's in the chair for the next period will have to face a recession in the US of A.
Ideal, eh? I mean, look. At the end of the day, if you look at rates in the US, it's almost a given that rates are going to rise. They're suggesting 3-4 rate rises next year, etc. If they're that good at planning it, why on earth is the economy in the dire straits that it was? That being said, whoever takes over the hot seat has got Donald Trump sat over their shoulder, breathing down their neck 24/7. It wouldn't be a job that I would take.
But Janet Yellen's done a brilliant job, right?
Very much so.
Stock market's record highs, unemployment rate at 16-year lows.
I would suggest as well, you've also got to take some credence to Ben Bernanke. He steadied the ship and managed to push things forward. And Janet Yellen has done a very, very stellar job in a very tumultuous world. There are a lot of mechanics behind it. The US is in rude health to an extent. The markets are at record highs, which is obviously good for general optimism and sentiment over there. But again, if you are raising rates too aggressively, too quickly, it is going to have a real impact on the real rate of return in the US.
Okay, let's move on to a FTSE 100 stock that reported this morning. Whitbread, coffee. I haven't drunk coffee for 20 years. It's extraordinary that the passion for coffee on the high street.
Well, it's an interesting sector. You've got obviously the coffee market and also the craft ale market. Two areas that have really grown over the last few years. And I sometimes question why. I'm not a coffee connoisseur. I'm not an ale connoisseur. But the likes of Brewdog, the likes of these coffee shops that are springing up here, there, and everywhere that provide something different. I heard a punter outside Embankment Station last week suggesting that you can now buy coffee that has been digested by an animal and is extracted from their detritus. I mean, at what stage do you think, hang on a minute, a jar of Nescafe will do me?
Well, I know that on the open they were down 4%. Let's have a few words about currencies. The Great British Pound against US dollar, 132.03. Euro Great British Pound across 88.92. I wish I was going to get both of those rates at the airport today. Obviously, it's all about interest rates. The Bank of England November and the Fed in December.
You've also got Draghi speaking on Thursday to look out for, so that's another one that could move the euro. I'm
pleased we're not trading currencies at the moment. Right, let's move swiftly on to broker updates. We've got Lookers. You wanted to mention a little bit here, basically a pre-rec to a new rec. It's basically gone from a buy to a hold with a substantial push down in price. What are your thoughts?
Well, again, you saw Pendragon yesterday, obviously.
That was a shocker, right?
I mean, that was poor. This is kind of in line with where their share price is, so it's not. It's just bringing the share their recommendation in line with the market where they are. There's very little premium or a marginal downside to where the shares are currently today. That being said, the whole car market is in a bit of trouble. You've got the likelihood of mis-selling on the finance packages. You've got new car sales declining. The likes of Volkswagen, Volvo, etc. have highlighted this already. And the used car market is falling out of bed because there's just no demand. So these sorts of companies are going to face a very tough time. And if they do come after them on these financing packages, etc., it could be a real tin of worms.
So the used car market, I believe, is 3 times bigger than the new car market. In terms of the new car market, have you actually looked at the numbers to work out who, if this is good, is this subprime?
Well, I wouldn't go as aggressively as that, but I think there is an argument to suggest that this is a real problem because at the end of the quarter, at the end of the month, whatever it may be, you've got to pay back your financing, and people are lending money, highlighted by the likes of Provident Financial.
Yep.
They are lending money to anyone and everyone, so long as you can keep up your repayments. Come push or shove, if you can keep that payment going, they will lend you the money to buy a 30, 40, 50 grand car. It's madness.
Okay, let's move on to a bit more madness. I guess a core number 62. Where did we pick that from?
So that's the number of years since the RSI and the Dow was this high. So
that's a momentum indicator,
yeah.
Okay, a breadth indicator, overbought, oversold, and we're saying that the market is overbought, and it's never been this overbought
since 1955.
So 62, yeah.
So again, I was talking to a trader yesterday who's been very cautious like me, but has started to go very bearish short to medium term from here. And we were talking about all the different sort of the RSI and everything else and looking at the overbought conditions. But he said the market just keeps going up. At what stage is it going to slow down, stop and reverse? I don't know the answer to that, but it's got to happen soon, surely.
Well, again, in the textbooks will say you, you should not sell a market because it's technically overbought or oversold, so that's not a reason to sell it. But it's almost like a sort of amber traffic light. It's a warning. Okay?
Be careful. The Dow at 23,000, 300, 400, 500, whatever it may be today, tomorrow, next week. We were talking about 18,000 just a wee while ago. So the US has been driven higher on the tax reform, the infrastructure, etc., etc., etc. But surely a lot of that has to be priced in. I'm not saying sell the markets and go negative and short and everything and anything. I still think there is a lot of value out there, but you've got to look for the nuggets as opposed to just broad buying.
Stock pickers for choice.
There you go.
Tim, thank you very much indeed.